Ladies and gentlemen, welcome back to the channel and welcome back to a new episode. In this video, we're going to discuss all of your catalysts for this week. This is the heart of earnings season. I mean, massive economic data, Fed meeting, PCE, freaking non-farm payrolls, GDP. Like, I don't think this week could get any more important for markets. In this video, I'll give you a rundown of all of your earnings, all of your economic data, what the big catalysts really are. At some point this week, we're going to get news on a Europe trade deal and potentially news on what secondary tariffs could look like on like China, for instance, for doing business with Russia. All of this will be important. I'm here to break it all down. Hit that like button and subscribe to the channel if you have not done so already. And let's get started. So this week, Monday morning, you got New Gold, Enterprise Products Partners, Aleris, Bank of Hawaii, couple other names. Monday and after hours, Celestica, Waste Management, Cadence, Tilray, Nucor, Whirlpool, UHS, and Crane. Some AI themes there like Celestica and Cadence. But Tuesday, you have United Health in the morning, SoFi, PayPal, Boeing, UPS, Spotify, Merck, P&G. Tuesday and after hours, Visa, Marathon Digital, Starbucks, Seagate Holdings, or Booking Holdings, The Cheesecake Factory, Teradyne, Caesars, and some others. Visa is going to be an important one, okay? How are consumers doing? So far, we've heard consumers are doing good. If Visa confirms that, that's great. Wednesday pre-market, Vertiv, another AI theme. Altria, Teva, Kraft Heinz, Generac, Humana, Etsy, Hershey's, Harley Davidson. I actually think Generac could be one of the energy AI themes that's kind of overlooked right now. One that I'm watching pretty closely. Wednesday and after hours, Meta, Microsoft, Robinhood, Applied Blockchain, Carvana, Lam Research, Qualcomm, Kinross, Ford, and ARM. Again, another big AI day. Wednesday and after hours, Meta, Microsoft, Applied Digital. I bought this stock at $3 a share. It's over 10 today. A lot of examples of that in the trading community. Check that out if you would like to. But that's going to be a pretty exciting earnings. Lam Research, Qualcomm, ARM, again, big stocks in the AI world. Thursday pre-market, CVS Health, Roblox, AbbVie, Norwegian Cruise Line, Cigna, MasterCard, Bristol Myers. MasterCard, again, another big one. How is the consumer doing? Are people still spending money? Is there a slowdown? What's going on there? Okay. Thursday and after hours, Apple, Amazon, MicroStrategy, Coinbase, Reddit, Riot, Cloudflare, Roku, and Cable One. Again, another big day, Thursday and after hours, just from a market cap perspective. Like Apple and Amazon, well over 10% of the S&P right there. Between Meta, Microsoft, Apple, Amazon, Visa, MasterCard, some of these other names, you look at that's like 20% of the S&P. Just eyeballing it, maybe 30% of the S&P reporting this week. So just from a broader market perspective, this week of earnings is going to be very important. Now, Friday, you have ExxonMobil, Chevron, Regeneron, T. Rowe Price, Colgate, Dominion Energy, and some others. So this is the most important week of earnings from a market perspective. So this is the earnings test this week. Now, as well as that earnings, we're going to have some economic data. We'll get into that in just a moment. But also the headlines. The headlines are going to move markets as well, potentially with a trade deal with Europe. But more on that in just a moment. Vought says that Trump is clear he has no intent to dismiss Powell. U.S. Commerce Secretary Lutnick says Bessent will discuss Russia's sanctions in their China meeting. Again, one of the bigger risks to this market is those secondary tariffs on countries that purchase Russian oil if the war in Ukraine does not come to an end in the next 35 days or so. That would mean China. That's the biggest risk I can see to this market at this point. Now, do I think Trump wants to do that? No. Like that would basically nuke any progress we've seen with China, with a trade deal, with just relations in general with China. I don't think Trump wants to do that. Okay. But Russia has also said 30 days to end a conflict like Ukraine is probably not going to happen. So we're going to have to see something happen here. I don't know if you're going to get any news on that this week, but if Trump kind of takes, okay, we'll give you towards the end of this year or something to get that war in Ukraine solved, then that's something I think the markets will react very positively to. I think it's like a big black cloud is the next, 30 days or so. We could have another round of massive tariffs. And I think some of Wall Street doesn't really want to front run that, doesn't really want to invest right now based on something like that could be coming. Lutnick says Trump is still ready to negotiate tariffs after August 1st. Lutnick says there are no more grace periods after the August 1st tariff deadline. Lutnick says the question is if the EU offers a good enough deal for Trump to back off his 30% tariff threat. Vaught says all Trump is requesting from the Fed is to cut interest rates. And in the news as well today, Israel could target Iran's supreme leader in the future. Vaught says that Trump searches for Fed chair not to be late on the economy. Again, I will highlight this. It has nothing to do with the Fed. What I take out of this is Trump wants a good economy. That's one reason why, I'm not super concerned at this point about those additional tariffs potentially being put on China. Like some kind of big shock event again. I think Trump kind of seen the damage that was done the first time, the, depression risks that were out there if the trade embargo on China were to last a while. And I don't think Trump wants to gamble with the whole economy again. It's what it sounds like to me. Like if you're trying to pressure the Fed to cut rates so we don't have some kind of recession, but you go out and cause a recession, what point is that? Sure, I mean, you could obviously blame Powell if you wanted to. Powell's going to blame Trump, but still you cause irreversible damage to the economy, and I don't think Trump wants to do that. And at this point, that is the bet that I am making. I am making the bet to say, I don't think Trump's going to do this because XYZ, as I've talked about. And Wall Street's here, right? They're not super convinced we're going to have another round of massive tariffs on China, but they're in the middle. They're it could happen, it may not happen. And that is, again, some of the upside in expectations from my view. It says here, South Korea U.S. tariff negotiations are probable at the Treasury in D.C. Trump on Powell says, quote, he said to me very strongly, the country is doing well. Congratulations. And I got that to mean that he's going to start recommending lower rates. Now, as well as earnings, this week is going to be massive for economic data. Enjoy your day. Tomorrow, it's going to be a slower day. But every other day picks up the pace, okay? Tomorrow, you're going to have Dallas Fed Manufacturing Index. Big deal. You're going to have a 2-year bond auction and a 5-year bond auction. Again, big deal. Tuesday, JOLTS job openings. You're expecting this to come down to 7.35 million. Last month, it was at 7.76 million. The way to really understand this is the more job openings, the better the economy, okay? Because if companies are looking to hire people, they're likely doing well. If they all of a sudden stop hiring, that is what tends to happen before the economy weakens, right? Before you lay people off, you stop hiring. And that's the best way to understand that. We are expecting about 300,000 job openings to be closed. So you are expecting some degree of weakness perceived weakness, at least from that data. Now, you also get the goods trade balance, expecting negative 94.45 billion in the deficit. Again, that's one of those things that feeds into GDP, which could be important. The Atlanta Fed GDP Now tracker is currently tracking about 2.4% GDP, with, again, the next update on Tuesday from that goods trades balance. S&P Case-Shiller home price year over year, some wholesale inventories data, secondary data points like Dallas Fed Services Index, JOLTS job quits, and the CB consumer confidence will also be coming out on Tuesday. We do have a 7-year bond auction here. That gets a little important because it's not really dictated by the Fed at all. So a 7-year bond auction is a little bit open to the market's perception of, one, economic growth, 2, government, deficit outlook, and inflation, right? Those are the things that really move demand for longer term treasury auctions. Now, Wednesday, lots of European growth data coming out, but you do have the ADP employment change, expecting positive 75,000 jobs. Last month, it was negative 33,000. The ADP employment change is basically the private payroll numbers, like not the government's data, but private data. You also get the GDP growth rate quarter over quarter, advanced data for Q2, expecting that to come in at about 2.5%, pretty much in line with the Atlanta Fed GDP numbers as of right now. Pending home sales month over month and year over year will also be coming out on Wednesday. Fed interest rate decision. Okay, so that's going to be a big day. Really, we're not going to get anything from the Fed. They're not going to cut rates. They're not going to do any of that. They're not going to hike rates, anything crazy. What we're really watching for is, what does the Fed signal for the next Fed meeting, which I believe the next Fed meeting would be in September. So July 30th to September 17th, it's almost 2 months. Markets are pricing in a cut for September 17th. As long as the Fed kind of leans in that direction, we're fine. But if the Fed pushes back a little bit to, we're going to be on this extended, wait and see approach, and they're not super willing to indicate that they're going to cut rates in September, that could be an issue, just because there's a 60.3% chance of a rate cut September 17th and only a 37.1% chance of a continued pause. If these numbers have to come back to more of like a 50-50, then that could mean a little bit of downside pressure on this market. But again, not a guarantee. On Thursday, you get the Challenger job cuts, expecting 71,000. The lower, the better here. Challenger job cuts are planned layoffs. So companies that have actually announced, hey, we're going to lay off this many people. So you recently, the last 6 months, you've seen a big spike in Challenger job cuts, like 08, 09 recession levels. And it came down quite a bit over the last couple of months. That's great. We're kind of in the right area of where we want to be. But if we do see those go up more than expected, that's obviously not a great thing. On Thursday, core PCE price index month over month, expecting 0.3%. This is the Fed's preferred measure of inflation. So we'll see how that comes out. Last month, it was positive 0.2%. Just to give you a little bit of an understanding here, 0.2% over a 12-month basis, simple math here, is 2.4% inflation. If we come in at 0.3% times 12, that's 3.6%, kind of running 12-month inflation rate. That's not great. There is technically the decimal here, so it could come out at 0.24%. Times that by 12, it doesn't look as bad at 2.88%. So you really want to see what the decimal is, because there's a big difference. I mean, even if you come in at the high side, 0.34% times 12, then you're looking at 4.08%. So, I mean, even if we get 0.3%, on the high side, it could come in at 4.08% trailing 12-month inflation. On the low side, it could come in at 0.25 and still get rounded to, 0.3. And that's only 3% inflation. So the decimal will be important here, and you'll kind of have to dig a little bit to find that. Personal income month over month expected at positive 0.2%. Personal spending month over month expected at positive 0.4%. Initial jobless claims have been relatively good recently, expecting that to come in at 220,000, kind of unchanged from last week. Chicago PMIs will be coming out, expecting those to get a little bit better as well. And then even on Friday, you have non-farm payrolls. Expectations are about 102,000 jobs. Last month, we added 147,000 jobs. So expecting a little bit of a weakening there, but not too bad. Unemployment rate is expected to rise from 4.1% to 4.2%. Average hourly earnings, government payrolls, manufacturing payrolls, all of that will also be coming out. ISM manufacturing PMIs are expected to rise as well. Final numbers for July: Michigan consumer sentiment, construction spending, new orders, prices, all kinds of secondary data comes out. But it's really going to be about the non-farm payrolls and the unemployment rate coming Friday morning. So as you can see, this is a big week for economic data. It's a big week for earnings. I think it's going to be a big week for trade headlines, specifically getting a deal done, a trade deal done with Europe is going to be one of the biggest potential catalysts that we could get this week. And that is something to be on the lookout for. As well as that, again, earnings and economic data. I expect the markets will probably move a lot, okay? We've been kind of going straight up, like the RSI and the S&P is 76. You could go higher, okay? Normally, when you're in this kind of straight up market, this melt up straight up market, the RSI can get to like 81, 82. So I've talked about this for a little while now, but I think around 650 could be the chill out moment. So if we go up this week, you're getting close to a time in which you should expect some kind of consolidation, a bit of a correction, a bit of a rotation. It wouldn't surprise me, for an example, this week, if big tech doesn't do much, maybe sells off a little bit. I think earnings are going to be good. I think the economic data is going to be good. There's no reason to think things are going to be bad, but maybe they're priced in from that perspective. It wouldn't surprise me if you see big tech kind of sell off a little bit, but let's say small caps outperform. Especially if the Fed is dovish on Wednesday, small caps are not even back to their all-time high you set in November of 2024. You still need on the IWM a rally of about 8.4% or so to get back to new all-time highs. It wouldn't surprise me if there is a rotation into small cap companies. Or interest rate sensitive companies, perhaps. That wouldn't surprise me at all. Be ready for that if that's what starts to happen. So let me know your thoughts on all of this down below in the comment section. Ladies and gentlemen, have a great rest of your day, and I will see you in the next one.